Okay, let's unpack this. Imagine you're trying to get a clear picture of India's booming clean energy sector, and a major player just dropped their latest financial results. Today, we're diving deep into the news from Waaree Renewable Technologies Limited, a name that's, well, increasingly central to India's green energy revolution. What does a company's quarterly report truly reveal? Not just about their immediate performance, but about the bigger trends shaping global energy.
Precisely. And when we examine these documents, you've got a press release, an investor presentation, board meeting outcomes, all landing on July 17th, 2025. We're looking beyond just the numbers, right?
Right.
We're getting a strategic snapshot, execution, market dynamics. It's all in there. So our mission in this deep dive is really to distill the most crucial insights from these sources, helping you understand what's truly significant about Waaree Renewable Technologies' first quarter of fiscal year 2026 and how it fits into that accelerating global energy transition.
Okay, so let's start with the headlines, the big numbers for Q1 FY26. Looking at the press release, the growth percentages practically leap off the page.
They really do.
Revenue, EBITDA, profit after tax, all showing incredibly strong year-over-year increases. But beyond just, the raw growth, what deeper insights do these figures offer you? About efficiency, maybe?
Well, what's truly fascinating here isn't just the scale, it's the consistency and, like you said, the efficiency of the growth. For
Mhm.
Q1 FY26, Waaree Renewable Technologies reported a total revenue of Rs 603.19 crores, that's over 6 billion rupees, roughly 72 million US dollars.
Huge number.
And it's a massive 155.2% increase compared to Q1 last year. Even more striking is the profit after tax, or PAT, that surged by 206.77% year over year, reaching Rs 86.39 crores.
Wow, over 200%.
Yeah. And EBITDA also saw robust growth, 186.14% up to Rs 117.54 crores. But critically, their margins improved too. The EBITDA margin rose to 19.49%. It was 17.38% last year. And PAT margin increased to 14.32% from 11.91%.
Okay, so that's the efficiency point.
Exactly. This isn't just getting bigger. It's getting more profitable per rupee of revenue. It suggests, optimized project execution, maybe better systems, tighter controls. It reflects what their CFO, Mr. Manmohan Sharma, called a disciplined operational approach and their ability to execute large-scale projects efficiently.
So it's a powerful combination then, aggressive growth, but also getting significantly better, more profitable at what they do.
Definitely.
And when we talk about how they're achieving this, their core business as an EPC, arm engineering, procurement, construction, that's clearly central, isn't it?
Oh, absolutely.
How much of this performance is driven by that EPC segment? And what does their, massive order book tell us about where they're heading? And maybe potential challenges too.
That's a crucial point. The investor presentation and board documents, they confirm the ETC segment is pretty much the primary engine here. In Q1 FY26, EPC contracts alone generated Rs 594.39 crores out of that total operating income of Rs 603.19 crores. So yeah, the vast majority of their business.
Almost all of it.
Yeah. And their unexecuted order book, that's projects they've won but haven't built yet, stands at a massive 3.15 gigawatts peak capacity, GWP.
3.15 gigawatts.
Right. And they expect to execute this within the next 12 to 15 months. What's also impressive is their bidding pipeline, which is even larger, around 25 plus GWP. That indicates significant future potential. They've consistently scaled this order book up, from 817 millivp back in 2023 to over 3,150 millivp now in Q1 FY26. And just in this quarter, we're discussing they won two big ones, a 435 millivp and a 131.6 millivp ground-mounted solar project.
So the pipeline keeps filling up.
Exactly. Now, while the scale is frankly astounding, the challenge, like for any big EPC player, will be maintaining that execution with base and comfort motto. Converting such a huge pipeline requires immense coordination, resources.
Right. Logistics must be a key focus. That's a fair point. But it also shows they're not just scaling up the core. They seem to be looking beyond traditional solar EPC. We saw mentions of new ventures, battery energy storage systems, BESS, and data centers.
Yes, and this is where it gets genuinely interesting, I think. Waaree is explicitly expanding its portfolio. They're moving into these high-growth areas, BSS and data centers. In fact, their order book already includes a 40-megawatt-hour MWH BSEPC project. That's quite significant.
Already on the books.
Already on the books. And their investor presentation, it showcases this broader suite of offerings modules, O&M, That's operations and maintenance. Basically keeping the plants running efficiently long term.
Right, the after-build service.
Exactly. Plus lithium-ion batteries, and they even mention green hydrogen electrolyzer manufacturing. They're thinking broad. Now, regarding Smart Joules Private Limited, or SJPL.
Yes. What's the story there, this investment?
Okay, so the board meeting minutes show Waaree is investing about 7.98 crores, roughly 960,000 US dollars, to acquire a 3.23% stake in SJPL. Now, SJPL isn't your typical renewable generator. They're the business of energy savings through smart cooling solutions for buildings, factories. They have offerings called Joule Pays and Joule Cool.
So energy efficiency, not generation.
Precisely. And SJPL itself has been growing steadily, turnover up from 38 cores in FY23 to 69 cores in FY25. But this isn't just, a passive investment. It feels strategic. Yeah. By linking clean energy generation with efficiency solutions, Waaree isn't just selling megawatts anymore.
They're selling optimized energy solutions.
Exactly. That's where the market seems to be heading.
Yeah.
And the documents mention first right to share subscription and anti-dilution rights for Waaree in SJPL's future funding rounds. That hints at a potentially deeper partnership down the line.
So it's not just building the power plants, they're looking holistically. How energy is consumed, stored, optimized across the whole system. That's a really comprehensive vision.
It is.
And of course, this kind of growth and strategic expansion, it doesn't happen in a vacuum, does it? How does Waaree's performance fit into this larger, frankly, incredibly ambitious story of India's energy transition and that global push for net zero?
Oh, it absolutely reflects a huge macro trend. India's renewable energy landscape is just experiencing unprecedented momentum right now. As of June 2025, India's total RE capacity stood at 234 GW. Solar contributed 116.25 GW of that.
Okay.
But what's truly remarkable is that solar installations grew by 51.6% year-on-year in just the first half of calendar year 2025.
Yeah.
Huge jump.
50% growth in 6 months, basically.
Yeah. And India also hit a major milestone. 50% of its total installed power capacity is now from non-fossil fuels. That's 242.8 GW out of 484.8 GW total. Yeah, they hit this 5 years ahead of schedule.
5 years early, wow.
It's significant. The government's targeting around 280 GW of solar capacity alone by 2030. That's up from 106 GW in FY25, implying something like a 21% compound annual growth rate needed.
That's ambitious.
Very. And this roadmap, plus supportive policies like the Solar Park Policy, the PLI scheme for domestic manufacturing, the rooftop solar scheme, it all creates massive tailwinds for companies like Waaree. And the projected need for battery energy storage also jumps out, maybe 70 GW of storage needed by FY30.
So it's clear Waaree isn't just riding a wave. They seem to be very much part of the force creating that wave in India.
So that's a good way to put it.
But with such rapid growth, diversification, how does a company like this ensure they maintain operational excellence? What are their long-term strategic pillars for managing this kind of scale?
Well, their investor presentation lays out several key strengths they believe underpin that operational discipline. They offer comprehensive end-to-end EPC solutions, design, engineering, procurement, construction, and that long-term O&M we mentioned.
The whole package.
The whole package. They emphasize strong relationships with developers, lenders, suppliers. Their unique proposition section highlights things like ISO certification for quality, a dedicated in-house team of over 300 people, innovation focus, customer relationships, and, crucially, a proven track record. They've commissioned 3.03 GW already, with another 3.15 GW under execution. Plus, they have a significant O&M portfolio, around 769 MWp, and they've developed some of their own IPP assets, too.
IPP being independent power producer assets.
Exactly. Assets they own and operate themselves. About 55 MWp developed, with another 41.6 MWp plant being set up. Looking forward, their strategy focuses on, more growth in EPC, looking internationally as well as domestically, and significantly expanding their O&M market presence, including using advanced tech like drone thermography.
Okay.
And this is all supported, they say, by an asset-light business model, which sounds good financially, but strategically it means focusing capital on services rather than owning all the physical power plants themselves. It allows for faster scaling, potentially.
Right, focusing on the services and execution. So it's really about delivering quality across that whole energy life cycle, not just winning the bids.
That seems to be the focus.
And, to give you the full picture, it's always important to look at those granular details, like notes in the audit reports. There was a specific exceptional item mentioned related to GST. What should we understand about that? Just briefly.
Yeah, it's a good point to clarify for completeness. The unaudited financials, reviewed by KKC and Associates LLP, They do include a note about a goods and services tax, or GST, investigation. Essentially, it's a tax dispute from prior periods. Waaree had claimed input tax credit, that's a type of tax deduction, on some solar projects.
Okay.
These projects were initially meant for customers, but then got redesignated for the company's own IPP portfolio, their own assets. The GST authorities challenged this ITC claim. Now, while the company capitalized the main GST amount, about 11 crore rupees, the interest portion on that disputed amount, around 4 crore rupees, or Rs 401.87 lakhs, was flagged as a one-time exceptional item.
Meaning not part of normal operations.
Exactly, not part of usual costs. They did get a show cause notice this quarter, and they responded. The key takeaway for you, really, is that the auditor's review concluded nothing came to their attention suggesting any material misstatement in the financials because of this, within the scope of their review. It's basically a standard regulatory disclosure about a past tax matter being resolved.
Got it. Transparency on a past issue, auditors didn't flag major concerns. Okay, so bringing it all together then, what does this all mean? Waaree Renewable Technologies Limited delivered an incredibly strong financial quarter. You've got triple-digit growth across key metrics.
Yeah, really strong numbers.
All while aggressively expanding its order book and, importantly, strategically venturing into these new areas. BCS, data centers, even energy efficiency with that Smart Joules investment.
And zooming out, their performance is just such a clear reflection of India's ambitious, rapidly accelerating clean energy transition. The company isn't just, participating in this shift. It's clearly a driving force, leveraging that strong operational base and, of course, supportive government policies.
It feels like the future of energy is, well, complex, multifaceted, moving beyond just generation to include storage, efficiency, new tech. And Waaree seems to be positioning itself right in the middle of that evolving landscape.
Which really leads to the question, doesn't it? Given Waaree's robust performance, what does it really tell us about the speed and scale of India's green energy ambitions? Especially with a country hitting key targets years ahead of schedule. And maybe how might their strategic investments, like the one in Smart Joules, actually redefine what a renewable energy company even looks like in the future? Is it less about just building power plants and more about becoming holistic energy solution providers?
Yeah, moving beyond the kilowatt hour. Something to ponder, for sure. We hope this deep dive has given you a clearer picture and maybe sparked even more curiosity.